All right. Excuse me. I think we are ready to go ahead and get started. Thank you, everybody, for joining us today. I'm so happy you're here. My name is Melody. I am the events manager here at TOPS. We're excited you could join us, and we're very excited to have our industry expert, Vishnu Sharma, here with us to talk about year end today. Before we dig into our topic, I just want to tell you a little bit about here us at TOPS in case you're not familiar. TOPS is an all-in-one operations platform. We serve homeowners associations, board members, and communities. We offer automated end-to-end operations, everything from accounting to resident management. Essentially, we're here to simplify. And to that end, that's one reason why we are so excited about today's presenter. Vishnu Sharma is the president of Sharma Associates. He's a certified public accountant, a certified fraud examiner, and the current president-elect of the Community Associations Institute. So we're very excited to have him here with us to share his expertise and insights with us.
Hey,
we know that the end of...
Sorry, go ahead.
Vishnu.
Sorry, I was jumping in too early. Go for it.
I was just going to say, we know that year end can be stressful, but it doesn't have to be. We've got your back. We're here to help you get organized and start with a plan. We're going to be taking some questions at the end, so feel free to go ahead and pop those in the chat during the presentation, and we'll try to get to as many of them as we can. So now, Vishnu, I will get out of your way and hand it over to you. Just one sec. Let me give you the control here. And you should be good. Let's
see. Perfect. Hey, good morning, everyone. Thanks so much for taking the time to participate in this year-end. Year-end accounting is always stressful, closing out the year because we've just gotten through budget season for everyone, and the chaos that goes along with getting budgets approved and waiving reserves if that's something you do in the state that you're in. Or getting them funded, and then getting out coupon books just in time to then turn around and have to figure out what you need to do to close out the year and go through the stress of what becomes the end of December and January. Closing out your year end is really two parts. The bulk of it obviously takes place in January or the month after. If you're on a calendar year, there are a number of associations that could have a fiscal year where you might be doing this in a July or a May time period rather than now. But the bulk of associations are usually calendar year end, which is December 31st, which means you're closing out the books for the association in January. What we're seeing most of, there's two parts. I think you want to think of it as there are things that you really need to do now, and now is in the next 15 days before the end of the month, where you actually need to move money or transfer funds if there is a due to, due from outstanding on your balance sheet. Where the reserve fund may have an amount that's due to it from the operating or special assessment. Also, if you may have the last reserve transfer that you need to do, whether for the month or the quarter, or you're a couple months behind, you have until December 31st. You want to make sure that money is moved over and in place in the correct fund that it needs to be. So you still got about 14 days or 15 days to get that done, because you really don't want to end the year turning over your books to your auditor or your year-end CPA with those things outstanding. On the screen are some of the obvious things, but we're going to address some of the things you really have to be thinking about really in December as you move into the year end. Reaching out to your vendors to make sure that you have all your invoices in place. So any services, if you've done your regular recurring contracted expenses, your utilities, those are the things that you know and you expect. But if you've had work done, repair and maintenance type stuff, legal bills, things like that, they can tend to lag the date of service that you're doing, which means you're getting invoices in January that you're going to have to record against the current year 2022. And the problem always becomes if you're trying to close out your year and you want to try to close out your year, you get your bank statements in the first week of January, and then you're doing your bank reconciliations and you're trying to get your financials closed out by the second, third, fourth week of January and get your books ready for your auditor. whether you're doing an audit, a review, or a compilation, you need to close out your books and give them final books, and you can't make changes to your books after you've given them to your CPA. That brings about a couple different things that you need to do proactively. And the first is anything that you know that is an expense that you've incurred. If you don't have the invoice by the time you're closing out your year, then you want to book an accrual for it. So you're going to book an accrued expense to the best of your understanding. If you can get the vendor to tell you what the amount's going to be, or if you're getting the invoice in January, but the expense needs to belong in December 31st, 2022, then you're going to book an accrual for that expense. If you do have the actual invoice, you can simply post the invoice, and you can post the invoice with a date of December 31st, even though it might have been issued January 1st, January 2nd, but on accrual accounting basis. For anybody who's using cash basis, it's not an issue. But community associations are required by GAAP, and depending on the state that you're in, state statute, I'm based in Florida, and in Florida, it is required by statute, in addition to generally accepted accounting practices, which is GAAP, to be able to do this on an accrual basis. So you want to be accruing for the expense. You can post the invoice with the December 31st date. That will push the expense back into 2022. So it's going to be reported in the right period. The check, when it gets cut, not an issue. The check can get cut in December, January, February, doesn't matter. Because you've posted the expense in the correct period. The flow of the cash is going to come out in the month, no matter what, when you actually disperse those funds. Okay. Doing your bank reconciliations, making a copy of your financial reports, backing up your community data. Just sticking though on that premise of your accrual, you're also going to have potentially prepaid expenses. And when you look at prepaid expense, so for example, a number of us have expenses where it may be due the first week of the month, each month. Well, we probably are cutting those checks in the last week of the current month so that we can get them before the board to get them signed and out, whether you're using a third-party software to prepare that, or you're having a manual check issued and signed for the board to go ahead and distribute. You want to make sure that if you are paying that in advance, you're making sure that when you close out the year for December, that you're booking that or reclassing that expense as a prepaid expense. Two different methods. My preferred method is I don't like to book anything directly to prepaid expense. I like to book it to the expense where it belongs, and then if I have to do a reclass, I reclass it to prepaid, and then just have it auto reverse back into the expense the following month. Or if I have to manually reclass it, I'd rather do it that way. But I'd rather the expense always show up in the actual GL account expense line. When you put things directly to prepaid, when you go back and you do a search of your general ledger to try to find expenses, it can be confusing because you're seeing a reclass rather than the actual expense with the vendor name and such posted. So the information you're going to see is going to be a little bit different. And sometimes, depending on who the user is of the financial data, it can be a little confusing as to what you're looking at. So just keep that in mind when booking your prepaid expense. Accrued expense always gets booked directly to accrued, the offset. So you're going to be charging the expense directly to the expense line. And you want to put enough description so that you're understanding, anybody who's reading the general ledger, depending on the software that you're using, that you have enough information in there to understand the vendor, the date of service, the nature of the repair or work that was performed on the accrual. And then, if you have the ability within your software and you can reverse that accrual on an automated basis. Some softwares allow you to go ahead, and when you post the accrual, you can check a flag and it'll automatically reverse for you. So you don't have to do that yourself. The next month, it'll just auto reverse for you. Depreciation. There's not a lot of capital asset reporting in the majority of community associations because the real assets are not accounted for that way, and then it's only personal, and it's usually personal. Every association should have a policy of a certain dollar amount above which they will capitalize an asset. And sometimes it's usually $2,000, $3,000, $4,000. It's a substantial amount, so that you're not, doing that for a desk or a chair or office furniture, things like that. That would be immaterial and really passed along as a cost from a community association standpoint. You'd be looking at something like a golf cart. If you might have done that too. Um, Anything that attaches to your building, your AC unit, your plumbing, when you do major repairs, those are usually are taken care of through reserves. Those type of capital assets that are attached or fixed to your building are usually not capitalized and depreciated either. Add in the complication or the added nuance that most community associations report as a not-for-profit entity, then there's really very little depreciation going on. However, if you do have any fixed assets and you need to do that, if you have your schedule and your schedule built, go for it. If you do not, you might want to just check with your year-end CPA. They usually have to maintain a schedule for you, and they can give you the amount that you need to post. And that way they're not posting it in arrears, and it's posted by you and it's included in your financials. 1099s. So 1099s is always a big topic, and there's been a couple changes here in the last, I want to say probably 2 years since the beginning, since 2020. They can be filed online. If you're not filing online, you really want to look to file online. It's a very simple process and much more efficient, especially now that the deadline for filing has been moved up to January 31st. So your 1099s are going to be due January 31st, 2023. There's two different types. There's multiple types, but there's two different types that you may come across as a community association. Everybody is familiar, I think, with the MISC, the miscellaneous, and that was, gospel up until 2020, in which NEC, the 1099 NEC, became the standard that should be used, and that's for reporting non-employment income. So if you have a contractor that comes in, they are not a registered corporation within your state. Um, Generally, you're going to be issuing them a 1099 at the end of the year. Depending on the software that you use, this is where the accounting software that you're using is super important, because the accounting software you use can have the feature that allows you to flag the unit or the vendor as a 1099 recipient. And then you make sure you have the tax ID, make sure you have the correct address and all that information. If it is a 1099, you want to make sure you're getting a W-9 completed by each of those vendors that are going to be reported as a 1099. That gives you all the information on that form when they fill it out that you're going to need to put into the system, that you're going to have to report on to the IRS, and that you're going to have to provide to the vendor at the end of the year. So if you use a software program that's equipped with that, it's as simple as making sure that you have everything in there during the year before you pay that vendor. And then at the end of the year, you usually can run a report, and that report can usually give you the information that you need so that you can just go ahead and then generate your 1099s. And there's softwares out there that'll allow you to pretty quickly just key in the data and then generate those 1099s so you can meet that 1031. The difference between the MISC, so the MISC has a couple nuances, but the MISC should not be used for community association for most of what you do for non-employment income. It's the NEC is the form that you should be using. The MISC has now been relegated to very, very specific circumstances, and as off and as unique as if you make income from the sale of fish. I mean, that is an actual category listed on the MISC as to when you should use it. So it's become a very specific document to be used only in certain instances. 99.9 of community associations out there would never use an MIC or have a need to use an MISC. So make sure you're using the correct form, the NEC, and you're submitting. There's some nuances also. For example, law firms, for whatever reason, required by the IRS, to be issued a 1099 NEC. There is some confusion sometimes on the 1099 NEC and MISC because you also report certain income paid to an attorney on the MISC, but that is for non services related. So if you're getting legal advice from your attorney, that would be an NEC, and that's what you're paying them for. If you're using an MIC report, it's usually because there's been some type of an award or settlement or something in which the attorney is receiving proceeds from, and that's when you'd use that. You want to use this time of year as well. The same way they tell you on the fire alarm and the carbon monoxide alarms that you have in your houses to make sure that you pick a particular, time of year that you're always going to remember, Christmas, January 1st, whatever it is, so that you remember to go ahead and change out that battery every year, whether you think it needs replacing or not. You want to use year end along the same lines to make sure that you're updating all the data in your vendor history. That if you're tracking the insurance, if you're tracking their license information and such, you want to make sure you're getting that certificate of insurance, the COI, updated from them. And if you set it as a standard, you can have somebody on staff or yourself just go through the list of vendors in your system and just make sure you're covering all that so you get updated and you have that material to start the new year. The 1096, just as a reference for anybody who's not necessarily familiar, the 1096 is simply the summary form for the 1099. It's a transmittal sheet that you're going to be using, but the 1099 is the actual document that you're going to be providing to the actual vendor that did the work. Okay. W-2s. I would want to think pretty much everybody out there nowadays is using some type of payroll service. If in the rare case that you are not using a payroll service and you are actually doing payroll yourself, two things to keep in mind. So one, if you are using a payroll service, they're usually going to be taking care of filing your W-2s. The W-3, for everyone's benefit, is the summary statement. So the W-2 is the individual form for each employee. The W-3 is the summary form. They call it a transmittal sheet, but it's a summary form for all the collected gross amounts that's reported under the W-2s. The W-2s are what you actually send uniquely to each employee. The W-3 is a transmittal sheet that you'll send along with your packet to the IRS, whether electronically or by mail. If you're using a payroll service, they're going to prepare the W-2, W-3s, and all of the reporting that you're going to need. And then you're going to get a report. The one thing you're going to want to make sure that if you are using a third-party payroll processor, the one thing you're going to have to make sure that you're booking in your books is going back to the concept of accrual of expenses. If you have a pay period and your pay period, for example, the last pay period ends December 26th, and employees are going to get paid again in the first week of January, you're going to want to make sure that you're accruing for payroll for that 5 days, 7 days, whatever period of time at the end of the year through December 31st. So if your payroll period is through December 21st and you're now looking at the 31st, you've got 10 days worth of payroll. So you want to make sure that you're accruing for that, because depending on the size of your payroll, that can be a substantial expense that you need to make sure you're booking. And if you don't, your year-end auditor is definitely going to pick that number up, and that will cause a distortion between the numbers that you're presenting in your month-end financials for December and year-end financials versus what the auditor is going to be. So you might think you're ending the year with a $10,000 or $15,000, gain on the year. The auditor does a calculation, brings in some accruals for expenses that were missed, and suddenly you're at a loss for the year of $30,000. The board's kind of wondering what happened. How did we go from a $15,000 gain to a $30,000 loss? And it usually ends up being accrual expenses that were not planned or not set aside for as an accrual. Okay. Anything else on that? Nope, I think we're covered on that. Along the same lines of payroll, you're looking at the 940 and the 941. So the 940 and the 941 are your quarterly and annual payroll tax reporting forms that you send in. Anybody who deals with the year-end audit review or compilation, you know that your auditor is going to definitely be asking you not only for the year-end payroll report for all employees, but they're going to want to see the 940, the 941, depending on the state that you're in. As I mentioned before, in Florida here, we have an RT6, which is the reporting that we have to do to the state of Florida. So they're going to want to see that too, because they're looking for the consistency of the reporting between all three of these reports and making sure that they tie out to what you have on your report for your income statement, your income expense statement, that you're reporting the same all the way through. You also want to make sure you have all of these readily at hand, because depending on the state you're in, you may be subject to a workers' comp audit annually. In Florida, because the workers' comp program runs through the state of Florida, we are required basically to have an audit of that done, and it's the provider of the work comp insurance who arranges that. And we end up getting either a tax bill or a tax credit at the end after they do that, but they're going to ask for all the same payroll reports and forms to be able to look at. So you definitely want to make sure that you have those safely and you're setting them up. And just a side note here on this entire topic about documentation, you want to make sure you're keeping all of your documentation clear, safe, online, in your server somewhere where you can grab them as you need to, because at the end of the year, when it comes time to give this stuff to your auditor, you just want to be able to put it on a flash drive and give it to them, or you want to upload it into a Dropbox or something like that, and then just move all this data across to them. So by structuring and setting this stuff up correctly, an AP folder, an AR folder, your payroll folder, etc., you're able to then just grab these folders at the year end and move these across. So the actual closing out of the accounting year, if you are working with a software that has a good software module built into it for accounting, a lot of this is done through that software. And depending on that software, it depends on how clunky or how difficult that process is. It can be as simple as pushing a button or a couple buttons, and then the system will close everything out in a matter of minutes, or it can be that you have a series of processes to run through. Obviously, something that can make it easier for you is what you definitely want, because you don't, it can be very complex, the year-end closing process, but we don't even realize what's being done when you get a software program that's actually doing this all for you, and it does it quite cleanly. So, you know, you have to decide on the printing of your ledgers, do you back up a copy of all of your data every year? Most of us hopefully are backing up our data. Sometimes if you're using a software product, it may have that backup built in. Others, you may be doing a backup on a monthly basis, a quarterly basis, annual basis, a daily basis. If you do not have something in the cloud that is backing it up for you automatically, you should be backing everything up, you know, daily, and you should have a service that's doing it, whether you're mirror imaging on another server or you're backing it up into the cloud. When you come to the close of the year, there are features that are going on and functions that are going on behind the scenes if you're using a software program, but it's actually closing out all of the balances on your income statement, your income expense statement, and it nets out whatever the difference is, and it moves it onto the balance sheet. Community associations, we call it fund balance, not retained earnings. Depending on the software program you're using, it may list it as being retained earnings. Retained earnings is for a for-profit corporation, so community associations don't qualify. It should be called fund balance at the end. But that's where it ends up. So whatever the net activity is, if you had a loss or a gain for the year, all of your accounts zero out on your income statement, and they end up on your balance sheet under fund balance or retained earnings, depending on what you're calling it. And then your income statement starts fresh for the next year with no balances, and then you start 1/1 entering your charges for all the unit owners for maintenance income, and then you're booking your expenses as you move through. But these functions are actually happening usually behind the scenes by the software program that you're using. The updating of the budget for the new year, usually you're updating that budget and you're doing that pretty quickly. to make sure that it's coupon season, so you're getting that done well in advance. The new accounting period usually set up by your system, whatever you're using. Carrying over purging data, unless you have a system limitation, strongly recommend against purging data ever, unless the system you're using doesn't allow you to function efficiently, has lags, etc. You want to keep that data integrity as long as you possibly can before you need to purge and then print out hard copies of that data. And that's it. I know this is a super quick 30 minutes. Melody, I'm turning it back over to you.
Let me grab my sound back on. Awesome. Thank you very much for sharing that with us. We've got some time now to take some questions. Let's see what we've got through here. Pulling a couple over here. Let's see. Does the 1099 NEC threshold apply to payments made to an attorney?
Yes. Yeah,
All
if you're
right.
paying your attorney for services, it's a 1099 NEC, correct.
Perfect. Okay. I think that's all the questions that we have, actually. Let's see here. All right, we've got a couple more, but these are a little bit more specific, so we may just follow up with these after the presentation directly. So let's move on here, and we'll follow up with those other questions directly with you all. All right, I'm going to hand it over to Adam Pierce now, who's our product marketing manager, and he's going to share a little bit more about TOPS One.
Thanks, Melody. Can you hear me all right?
Yes.
Oh, great. Thank you, Vishnu. That was a lot packed in 30 minutes. You probably need some water, I think. I see why we keep you around. You're a wealth of knowledge for us. So thank you for joining us today. And thank you for all you guys joining us on this webinar. We know you're extremely busy. This is kind of like go time for you, your accountants, your property managers. And we wanted to share some best practices if we can help at all. And then also kind of tie it back to what we do here at TOPS, which is at the heart of it. TOPS is accounting software with lots of interactions and community engagements and front ends for our property managers to use. Some of the things that Vishnu, the 5 steps he talked about today, each one of those TOPS has got a robust module built out, everything from reporting to automation of tasks and integrations with APIs. So a few things like when he was talking about 1099s and gear ready for vendors, we have a suite of vendor reports that will pull all their information, allow you to update them. I know Vishnu talked about licenses, insurance. You can also even just check them if they do need a 1099. So when you do your summary reports, all those will be included. So TOPS really works to automate that. Another thing is to make sure you don't have any open items. That was step 1. We have, I think, 65 canned financial reports already set up for you. And then we have a slew of customizable ones. And they even automate, package themselves up and email themselves out, and will even print. You can set them to automatically run and to help you close your, not only your year, but monthly, weekly, whenever you need to reconcile your books. Another kind of robust tool that we have is through our partners and API connections, which is Smart Baking, which we launched earlier this year, and our customers are loving that. One of the biggest features is auto reconciliation. So it automatically reconciles and keeps your accounts reconciled every day. And so when you come to the end of the month or at the end of the year, all that work, that manual checking and Excel or et cetera that you do today is already done for you. If there's ever any issue, it notifies you right away. If there's a mismatch or something comes in 2 forms or it's broken out. So all these robust tools are really at the heart for accounting and closing and year end. It's just to make sure that your day, your month, your year is as easy as possible. We really do believe in letting the software do the work for you. One of the things that we're going to show you in just 4 minutes is like probably the grand dam of this year for the tool that everyone is using with TOPS to close their year. It's our accounting your dashboard, it literally will set up your new budget by copying your existing one. It allows you to make changes to your budget to increase or decrease by percentage overall, or you can manually adjust the accounts, and then it will close your fiscal year down, and then you can reopen it at a later date if your CPA needs to go in and make changes or journal entries. All that happens in less than 4 minutes. And so we're about to show you a video. It'll take 4 minutes to walk through how we close the year and then reopen it and even make adjustments to fees if we need to. So with that, I'll stop my sale pitch, and then we'll go ahead and hit go on the demo and just take a look how easy this is. So we're going to start with closing the fiscal year. To do this, you select your community. And then we're going to go to that tool under related links of our software, which is the accounting year dashboard. This is really what sets up, your main 3 functions of when you're closing a year or setting up a new year. So we're going to go to close, and you select the year, and literally you click a button and say calculate. So this is where it's going to go ahead and create some summary levels for you that you can check with your reports that you've already done or your financial reporting packages to ensure everything looks correctly before you push close. So you can see here where it's got the assets and liabilities all lined up for you and the ending balance. And then if you're okay with it, it'll put today's date in by default. Put a reference in, just a note for yourself that what you're doing in your closing. And then after this, you just hit calculate and close the year, sorry. And then it's done. And so the next one that we're going to go to, it has maybe 2 more clicks, but then it also gives you some options for creating your new budget. And then how we do this to save time is you have the option, after selecting a community, you have the option to copy over the budget and it'll recreate it for you, including all your custom fees if you create any assessments or customized ones, because we do allow you to do that in the software. It will keep those too, and it will bring those over as well, so you don't have to recreate any customized assessments or fees or charges that you have. So here you can see we're going to it and getting ready to hit get started. We're going to set up the year and the information. This is also where you will put in your period frequencies and your accounting method. And here we're set on accrual. Make sure you enter your suspensory account. And this is just showing where how we start our fiscal. If your fiscal year doesn't start on 1/1, you just make adjustments. Like when we worked with the military, theirs starts typically in October, so they would do an October year begin. Here you can see all your accounting periods. They automatically fill out based on what you say your start date is, but you can also adjust them if you need to. And this is set up monthly. So there's complete customization throughout the entire process. Here you'll see where it's asking, so you put in the year, and then you can see right underneath from fiscal year, there's a toggle. You can even increase the amounts if you want to increase your budget by like 10%. And I believe it walks it through, or you can manually go and make changes. Here you're going to say, I'll use the toggle, and I'm going to just say, go 10% across the board. So it updates your budget, and it will increase the budget amounts per each account by 10%. And then here I'm making some changes to say some dues. So I'm also going to increase all these dues by 10%. That's a math pause. And so we've increased the budget and our fees and dues. And after that, we just go next forward. and you are done. So your new budget's all set up. And so this video, I think, is about 4 minutes. Depending on how much customization you need to do, we customized it all, including the fees, and increased the budget. So literally in a matter of minutes, you can close your year and then start a new budget, and you're good to go. And that is it for our demo video and our sales pitch. So it was exciting today.
Awesome.
Yeah. Well, thank you, everyone. Yeah, of course.
Thank you so much, Vishnu, for being with us today and sharing this information. Thank you all for joining us. If you're interested in what we saw today, you can schedule a TOPS demo now. And just again, thanks for being here. You can reach us at marketing@topsoft.com, and we appreciate you spending this bit of time with us today. Hope you all have a great rest of your day.